Greetings, Cretan learners. My name is Mr. Simbi and welcome to today's class. In today's class, I'm dealing with trading stock surplus, trading stock deficit, as well as your consumable stores on hand. I have a question with me here that I would want us to practice together. Let us begin. It reads, the information is extracted from the pre-adjustment trial balance on 28 February. And trading stock is 112,500. Remember, this is the trading stock according to our records. According to our records. The adjustment then reads, a credit note received from a creditor, B. Dube, for goods returned 1,300 has not yet been entered. So they're trying to tell me from this 112,500, I have to come and subtract 1,300. I'm subtracting the 1,300 from that particular amount. All right. It is very important that you do that before you can continue. So I want you to have your calculator and I want you to say 112,500 minus the 1,300. And then you end up with 111,200. Then they say, the physical stock taking showed stock of 118,500. So we then conducted a physical stock taking and we realized that we have 118,500. Already you can see that the physical stock taking is more. Once your physical stock taking is more, you are now going to have a trading stock surplus. All right? You're going to have a trading stock surplus. But we want to know how much is that trading stock surplus. So you would then say 118,500 minus the 111,200. Then the difference will be 7,300. Remember, we agreed that is your trading stock surplus of 7,300. I want us then to record these adjustments in the general journal. The first one, we have a creditor in whom we have returned goods to. So I'll come and debit B. Dube, the creditor. I'm decreasing, therefore, what I owe them. So I'm going to credit the account by 1,300. And then I would then credit my trading stock. That means I'm decreasing my trading stock because there is trading stock that has been returned back to the supplier. So I'll credit it with 1,300. I have recorded this adjustment so far. Let's go to the second one. And the second one has to now deal with the trading stock surplus. And once I have a trading stock surplus, I will debit my trading stock. So I'm debiting it with 7,300. And then I'll credit my trading stock surplus with 7,300. Keeping in mind that my trading stock surplus is income. Keep it in mind that once you have a trading stock surplus, it will be treated as income to the business. All right, let's quickly see what we can do when we are given the general ledger. In the general ledger, we now want to see how we can post these particular transactions. The first thing you have to remember is that your trading stock account is an asset. So on the debit side, you have a plus. On the credit side, you have a minus. So I need the balance from the records, which is my 112,500. So I'll come here, 112,500. That is my opening balance of stock. And then, was there any stock that was returned? Yes. Remember, we returned stock to Dube, and that was 1,300. So I'll come to the credit side. I'm decreasing my trading stock thereof. And I'm saying creditors control. Remember, this is from your creditors allowances. And therefore, I'm going to have my 1,300. I have returned stock to my creditors. It decreases my trading stock account. In that case, then, we are then told that the physical stock taking showed trading stock of 118,500. That becomes my balance brought down here at the bottom, which is 118,500. That is my balance carried down at the top here, 118,500. When I have these figures, therefore, I can then quickly say which side has the highest amount. And the highest amount becomes the credit side. So I'm going to add these sides, and I'm going to get an amount which is 119,800. 119,800. So I'll come here, it is also 119,800. So I'll now say the difference here becomes my trading stock surplus then. So I'm saying 119,800 minus 112,500. That gives me the 7,300. That is my trading stock surplus. Trading stock surplus. With the trading stock surplus, when I come now to my trading stock surplus account, I will therefore come and credit in my trading stock surplus. Remember, it is income. So I'll say trading stock, and then I'm going to credit it with 7,300. And then I'll close it off to profit and loss, 7,300. There it is. When I am doing the accounting equation, it is very important for you to know which account is debited and which account is credited. And therefore, when you understand that, it is also important for you to know whether the account is an asset, income, an expense, or a liability, because you need to know the effect it will have on the accounting equation. Let us begin and see. Here we have the first one, which was the 1,300. That is the return of goods. When I'm recording that, I will debit my creditors control. So I'll come here and I'll debit my creditors control. Debiting my creditors control means I'm decreasing my liability. So I'll come here, it's minus 1,300. And when I have debited my creditors control, I now need to credit my trading stock. I'm crediting my trading stock because goods have been returned. Remember here, I credited it. So I'll come now, once I credit my trading stock, remember trading stock is an asset. Once you credit an asset, you are decreasing it. So it's minus 1,300. Does it affect your owner's equity? No. So here it will be 0. Remember, the accounting equation has to balance. So on my assets, I have a minus 1.3, and on my liabilities, I have a minus 1,300. Let us see on the second aspect then. In the second aspect, I have debited my trading stock. That means I'll come here and I'll debit my trading stock. Debiting trading stock simply means I'll come to my assets and I'm saying plus 7,300 on my assets. I have debited trading stock, and debiting trading stock means I'm increasing my assets. So I'll come and say plus 7,300. And then I will credit my trading stock surplus. I'll credit my trading stock surplus. And when I credit my trading stock surplus, that simply means my income is increasing. So I will therefore come to my owner's equity and I'll say plus 7,300. Remember, I told you trading stock surplus is income. And the moment I am crediting my trading stock surplus, that means my income is therefore increasing. So I come to owner's equity plus 7,300. Does it affect my liabilities? There will be no effect on the liabilities. Hence, my accounting equation would have balance. We are now going to look at consumable stores on hand, and the information reads: extract from the pre-adjustment trial balance on 28 February, and the packing materials is 3,000. Remember, this is the packing materials that would have been purchased by the business. The physical stock count showed packing material of 900 on hand. That simply means we purchased packing materials of 3,000. We used some of them, and then at the end of the financial year, some packing materials were not used, and the ones that were not used are 900. That is what we have on hand. In the general journal, we therefore come and then we debit consumable stores on hand, and we debit it with 900. We debit it with what is on hand, 900. And we credit packing materials 900. So we record in the general journal what is on hand. We will now record it in the general ledger. So in the packing materials, remember it's an expense account, so it will increase on the debit, but it will decrease on the credit. And therefore, you have total brought forward, and the amount is 3,000. So I'll come here, I have my 3,000. And the consumable stores on hand is 900. I now want to know how much am I going to take to the profit and loss account. So to see that, it's very easy. I'll just say 3,000, 3,000 here. Therefore, the profit and loss account becomes 2,100. That is what I therefore take to my profit and loss account. Remember, this therefore becomes my expense for this financial period. When I come here, therefore, I now need to record an amount in the consumable stores on hand account. Remember, this is a temporal account, a temporal asset. Therefore, I will increase it on the debit side. I'll therefore come here and say packing materials, consumable stores on hand, it is 900. And in the profit and loss, I'm recording the expense for this year. And the expense for this year is 2,100. When you have done that, therefore, you would have posted properly to your general ledger. And there you can see it. After the general ledger, therefore, we must do the accounting equation. In the accounting equation, we will debit our consumable stores on hand. We'll debit our consumable stores on hand. Debit consumable stores on hand. And when we debit consumable stores on hand, remember, an asset, so I'll come here 900. And then I'll credit my packing material. I'll credit my packing material. Crediting packing material, which is an expense, is decreasing an expense. Once you decrease an expense, on honest equity, it's going to be plus 900. And this will not have an effect on my liabilities. Dear learners, we will now go for an ad break, and I'll see you shortly.